Testing 1, 2, 3. There it is. All right. Sorry. Got it now. So just to recap, coming back from a disappointing loss to Youngstown, whose coach now is Bo Bellini. He went from Nebraska to Youngstown, from 70,000 people to virtually maybe a couple thousand in the stands because of the wet, rainy day. But if you love doing what you do it for not the money, but for, I guess, the love of the game, right? And so that means that two Big Ten, so Tressel, who was at Ohio State, is now the AD there, and Bo Bellini is the head coach for football, and they both got their start in the 90s when Youngstown was a powerhouse in the FCS. So anyway, my Leatherneck's lost. We got our back up against the wall. We got to win 2 out of our last 3 to get to the playoffs. No doubt we will do that. So after Friday afternoon, it was, basically, what we talk about on Friday, how we have range-bound Friday. I think we had the end of the quarter, the end of the month sell-off, which happened in the last, 45 minutes. So last hour. I think that the important thing to note is that needed, I don't know if it's complete. I think we're going to trade in this little range. I'd like to see the market go back. I'll show you, get a little bit of a retracement back to that 2050 area. And then that could set the stage for a big rally. To note this week, we got unemployment numbers coming out on Friday and productivity reports and so on. Very interesting little topic on Bloomberg this morning, listening to how the productivity numbers don't really mean anything and how interest rates really don't spur the economy because we're a service-based economy. When big manufacturers need to retool, buy more machines and so on, when we were, post-World War II manufacturing country, then interest rates really mattered and it spurred economic development. So, and that was a better way to look at things, right? And how do you get productivity numbers anymore because of how a technology impacts everybody's productivity? If you think about where we can do this broadcast, I can do this from anywhere now because we are a service-based service when we decide to institute all the new things that we're putting in. So anyway, I think that the market's still poised to make new highs. I think, Janet Yellen, came out with her hawkish, leave December on the table because that she, doesn't want to seem like they're a lame duck Fed. I don't know if that's even a way to describe them, but at this point, can they really come off zero without terribly affecting the economy? So let's go to screen share. I got some things I want to show you. I think that are very interesting and should be what's going to be, it might be for our new users. These are things that we cover every day. And the way I like to look at the market, I look at the market sort of from larger time frames into the smaller time frames. And then we try to, make educated trading decisions based on where we think the market is going to go from there. So let me go to screen share and we can start with the ES, okay? All right, let's go to let me see here. Am I in the right one right here? All right, there it is. Okay, sure. All right. So what I have up in front of you is day charts. Okay. Hopefully this will get bigger for you. And this is the SPX. Okay. So on Friday, we had a high of 2094.32 in the SPX, and then we sold off. All right. Right here, 2103 half. If you look at this SPX number, so your cash right here is where the big sell-off started and made the lows based on in August the 24th right here, okay? So there was the big sell-off, and now we consolidated in this area, and we have moved back up, and we are now near the area where this massive sell-off took place on the 24th of August. So on Friday, we had a high of 2094.32. Okay, so here's where the cash has to go through this 2103 half. And once we take that cash out, we should be looking for the market to head up to the new highs, 21, 21.20, 21.34. We got a month left. This market could do that in 2-3 days based on the way it moves at times when all the buyers decide to come in this bull market. Our day pivot in the SPX is moved up to now 2012.39. All right. So as long as the market stays above 2012.39 on a day basis, then this market is in a bullish note. Now, remember, these pivots are our pivots that we've developed. And, when we get them out onto you on, you'll be able to have these when we get them out to you on NinjaTrader. Okay, these have all been programmed into our new software package that will be available on NinjaTrader 8, or not 8, on just NinjaTrader. All right, so here's DES, okay, from Friday. All right, the day pivot for us is in a bullish mode as long as we stay above 1993.75. Okay, here is where the 24th of August, 2103.35 is where the break started from. All right. And then we have the high from Friday, which was 2094.75. Note, all right, we kind of look at these patterns. Now we're starting to get into those patterns where we have, here we got 2 down, 3 up, 2 down, 2 up. We had a down, unchanged, 2 up. All right, now we've got 1 down. Now we're working on that. Are we going to start the pattern where we get a little bit of retracements and we start talking about consolidation and see if we can get up through these highs? So those are what we have going on with the, on the day time frames that I wanted to show you, right? The longer time frame. So going to the market from overnight. Let me get this one out of here too. All right. So let's look at the market profile overnight. All right. We're now currently making a high at 2078.25. Okay. And we had a low down here overnight. Let me put the crosshairs on here so it'll be a lot easier for you. Market profile looks unfinished down here, 2064.25. Okay. And then here's the area that I'm really looking at right here, this unfinished bottom, sort of the low. This is this area right here, this 2055 half to 2053 half over here. And I got some single prints from 2051 to 2048.25. So I think that the market is going to trade in this range till we could take that top out. I thought that here's the low of the Fed day. Okay. All right. And we didn't take out this area and made the low right here. And then, that was after the announcement and the hawkish remarks. And then the market went back up and made new highs on the day. So I think this is the bottom of the range that we got to be looking for rebalancing. And then on the top, as you can see, let's just move this thing up here. A lot easier. I do this so it doesn't jump around on me. All right. So we are, we got some single prints up here starting at here at 2083 up to 2087.25. All right. And we're getting back into the area where we broke from on Friday. Okay. So the market, took the sell off, and now we're kind of, sorry about that. And we've kind of regained. It opened up this morning. It opened this morning here at bracket T, sold off, went down, made lows, and then by mid-evening, 3:30, 4 o'clock, it took it all back. And we're trading in the bottom. We're trading back in value from on Friday. We'll show you that when you see the charts. Okay. So I think that the market could be heading back up to the top. I think we're going to be taking a look to get up here and take these single prints out, and and then we'll see how high we can go, right? So basically, the way we do this now, for you new followers, we take the chart, okay, and we put them right here in our chart. And so we got the value area low at 2076. So we're trading back inside. We got the point of control, which is the most volume point of control, at 2080.50, 2083.5, top of value. Above 2085, I think we go up and take all the single prints out, and the market turns bullish, and we have a shot at Friday's highs. So that's what we're looking at. Our 5-minute pivot right now is sitting at 2073. Let me give this a flip to the 15. Okay. All right. 15 is down below us also. And the 30-minute pivot is also below us. So all the pivots are in a buy currently. And once again, for your new followers, these pivots are man over market pivots. These are not to be confused with the pivots that come from the floor trading pivots. Okay. So no reason not to believe that we're still in a bullish mode. I still think we're going to be in a range until we can take out those levels that we talked about on the day charts. Okay. For today, above 2083.5, look for it to go and take out all the single prints that we talked about also. All right. Let's talk about CL. All right. Because I'm still not convinced that CL is out of the woods. So what I'm going to do here is I'm going to expand this for you. Here's our day chart that we talked about, and I've been saying now for about a month that 41.93. So now it looks like we're at 41 right here, 48, 41.85 is the number. If we take this out, I think you're going to see new lows in the CL. It defended it last week. We didn't get that close. I mean, the low last week was at, let me put it right here, at 40. So 42.58. All right. We came within a buck of going through this zone that we've talked about. And then it rallied about $4 off of that. I don't know if it was, probably due to a lot of shorts in the market and short cover rally. Also, let me see if I can move this out, get it out of our way. All right. So that's what I'm looking at on oil and the day chart. For today, we're sitting right here. Okay, right here. We're sitting below value, all right? And the market is sitting right at the value area low is 46.16. I got a bull bear zone of 46.24, point of control of 46.38, and then 46.53. So 5-minute pivot is sitting right here at 46.11 area. So it's trying to get itself back inside value. And, if it could get back above 46.24, I think the market will move back up. So I don't think that just because we had a $4 bounce off of that number, that oil is out of the woods. So we got to be careful. I think oil, I'm still waiting for the hammer to drop. Where I need one company, one major company file a Chapter 11 or default on some bonds, and I think we'll have what we're talking about. All right, Janet Yellen and the interest rates. We're going to raise rates. What did it do? It really took the sales out of the rally that was going on in gold. I mean, gold was made a high up here at, 1173, almost 1174. We've come off down to here, made a low on Friday of low is 1133.80. So, man, that's like a $35 break. But we're still bullish gold unless we get under 1113, 1114 area. All right. Still bullish gold. With the idea that, that the rate hike was on the table. People are, thinking that, they can finally put their money in something that's going to earn interest. But remember, I say this and I say it for all our new users. Gold is a demand product. It has nothing to do with supply, and it's like the flavor of the month. Why do I want to own gold? Do I want to own gold because it's a hedge against inflation? Obviously, we have no inflation. Do I want to own gold because I think that the world economies and there's some unknowns out there that can cause a global slowdown bigger than we have, and I want to protect my currencies. It's so these are the things that people buy gold for. Nothing to do with supply, demand, and so with the idea that the Fed would raise rates and finally pay a little bit of a dividend or a little bit of a yield, you can take your money out of gold and put it into a treasury that's earning interest. So that's one of the reasons, and that gold probably has taken it on the chin. But I like I said, I'm still bullish gold unless we can get back under 1114 there. So that's what we have with gold. I'll give you the. All right. So gold is trying to get back up inside valley. I'm sorry, that's oil. Sorry. Let me bring the gold chart in. Right here. Here it is. I'm sorry. All right. There it is. So gold is trading below value. Its 5-minute pivot is right here. Right here at 1139. You got the bottom of value 1140.70. Bull bear zone 1140.70 also. Point of control is 1142.70. And then also at the value the value area high of 1142.70. So gold is taking it on the chin, but what happens if they don't raise the rates and they put it off into sometime in March of 2016. So like I said, demand product right now, it's down $35 off the highs of last week. So we'll see if we get a bottom in this thing this week. Okay. Unemployment numbers coming out Friday could affect this. All right. And then lastly, but bonds, very difficult to trade bonds. I mean, this market doesn't trade anymore based on fundamentals. It just trades on sentiment, whether you think they're going to raise rates or lower rates, right? So very tight range. It's probably been in from I think 158 to 155 now for over a month and a half. Trading below value right now. I've got 156.03, 156.14. As a point of control, 156.17, and then right here 156.29. So it's all going to be up to Janet Yellen and the Fed that will get us off these contracted ranges. So, all right, just to recap, I think that the sell-off on Friday was due to the end of the month, and right now we're back inside value from Friday, and looking for the market to retrace up in here. If we take out this 2083, we'll go up here, take out our signal prints, and then then it becomes do we go and try to get to the highs of last week? So I think the market's going to stay in a little bit of a range. I think it has to balance here before it will go out and make new highs. So any questions, Anthony? So remember, if you have questions, you can type them right into the Twitter feed, or you can type them right into the chat room on the sharing Google, all right, or the Google Plus. So anyway, still working on getting all our ducks in a row, getting very close now. We're launching the trading funding program and all the new charts on NinjaTrade. So hopefully stick with us. I think that the market is probably in a range, but you never know. Never know how, what could happen, what kind of news comes out and affects it, especially in the increased volatility that we've been seeing since August. All right, everybody, have a good day trading. Talk to you later, and stay with us on Twitter. Follow us on our updates, and good luck. Remember, always put the green into your account. Green into your account. All right, talk to you later. Bye.